On Friday, January 24th, U.S. stocks closed mixed, with a sharp divergence between sectors. The Nasdaq and S&P 500 edged higher, supported by tech giants, while the Dow Jones Industrial Average slid on weakness in financial and industrial stocks. All three major indices posted weekly losses, reflecting market jitters as investors balanced geopolitical risks, Fed policy uncertainty, and corporate earnings signals. Key closing data shows a clear split market. The Dow Jones Industrial Average dropped 285.30 points, or 0.58%, to settle at 49,098.71 points, dragged down by a 4% plunge in Goldman Sachs and a 3% decline in Caterpillar. The S&P 500 inched up 2.26 points, or 0.03%, to 6,015.61 points, hovering near recent highs. The Nasdaq Composite outperformed with a 0.28% gain, adding 65.22 points to close at 23,501.24 points, buoyed by chip makers and large-cap tech. For the week, the Dow fell 0.53%, the S&P 500 lost 0.35%, and the Nasdaq dipped a marginal 0.06%. Sector performance told a tale of two markets. Tech stocks saw extreme polarization. Intel crashed 17%, its worst daily drop since August 2024, after issuing a dismal Q1 earnings forecast and warning of supply shortages, prompting Citi to cut its target price. Conversely, Nvidia rose 1.53% on news of CEO Jensen Huang's upcoming China visit, while AMD gained 2.35% as UBS noted Intel's woes would widen its competitive edge. Microsoft and Netflix also rallied over 3%, with Amazon up 2.06%, underscoring capital rotation into high-quality tech names. Safe haven assets surged amid global economic uncertainty and rate hike concerns. Gold futures hit a record high of $4,940 per ounce intraday, closing at 4,883 SAR with an 8.46% weekly gain, its best since 2020. Silver futures topped $100 per ounce for the first time ever. Natural gas prices jumped 4.6% on winter storm forecasts, notching a historic 70% weekly surge. Crude oil also advanced as the U.S. deployed warships to the Middle East and imposed new sanctions on Iran, stoking supply disruption fears. Fed policy remains a key wildcard. New York Fed President John Williams stressed that current monetary policy is appropriate, ruling out near-term rate cuts and reaffirming inflation fighting as the top priority. Markets are fully pricing in a 25 basis point cut in July, but uncertainty lingers ahead of the January 29th FOMC meeting. Investors will closely parse the policy statement and Powell's press conference for clues on the rate path, as valuations of the S&P 500 remain well above the long-term average of 15.9x. Looking ahead to Monday, January 27th, stocks are likely to trade sideways with limited volatility, as markets enter a wait-and-see mode before the Fed meeting and big tech earnings. Key watch points include: first, U.S. November durable goods orders and Dallas Fed Business Activity Index, which will test economic resilience. Second, tech sector sentiment, whether Nvidia and AMD can extend gains, and if Intel's sell-off spills over to other chip makers. Third, geopolitical updates, especially developments in the US-Iran standoff and Russia-Ukraine peace talks. Strategy-wise, investors should adopt a defensive-offensive mix. Prioritize high-quality tech leaders with solid earnings outlooks and hedge portfolios with gold or energy stocks amid geopolitical risks. Avoid rate-sensitive financials and industrials until Fed policy clarity emerges. Next week's earnings from Apple, Microsoft, Meta, and Tesla will be make or break for the market's rally, as investors seek confirmation that AI investments are translating into real profits.